Thank you for joining our webinar tonight. My name is Mii from Phillip Futures and I will be the MC tonight. Now I would like to have a quick sound check. Can you guys hear me loud and clear? If you can hear me clearly, please select yes to let me know. Okay, thank you guys for the responses. So during the webinar, if you have any question, do type that up into the question box and I will address the question during the Q&A session at the end of the webinar. So before I introduce our speakers, please allow me to introduce our company. As usual, I need to emphasize on our disclaimer where this presentation has not been reviewed by Securities Commission Malaysia and does not constitute any recommendation. Phillip Futures is a wholly owned subsidiary of Phillip Capital Holdings Sdn Bhd. It is incorporated on 7 October 1995. Our headquarters is in KL and branches distributed across Malaysia such as Kota Damansara, Melaka, Penang, Johor, Kuching, Sibu, and Kota Kinabalu. Other than that, Phillip Futures is a trading participant of Bursa Malaysia Derivative Berhad, clearing participant of Bursa Malaysia Derivative Clearing Berhad, and also a holder of Capital Market Service License. I would like to take this opportunity to extend our gratitude on behalf of Phillip Futures to our clients. Without you, we are unable to achieve the awards. Our mother company, Phillip Futures, has offices and branches over 14 different countries. For futures, we cover products from different exchanges. Phillip Futures are mainly focused on futures product and CFD. So why choose Phillip Futures? We provide advisory service, wide array of products, send out latest market news to clients, and our headquarters have 24 hours broking and execution support. No matter you are our client or not, we offer free account opening, free one-to-one coaching sessions, free seminars and webinars, and you can search for our upcoming webinars on our Phillip Futures website. The platform for future trading is Phillip Nova, providing desktop and mobile version. So if you would like to try out for our demo account, you can scan for the QR code and have a try for it. Now here is our currently ongoing promotion. The first is Phillip Star Traders, Phillip Star products. Our exclusive clients are able to enjoy super low rate for trading micro crude oil, micro gold, and China F50 from now until 31st of December. Second promotion will be Omson Rewards, which is in conjunction with this webinar. You will get to earn cash reward up to 400 ringgit Malaysia when you start trading FKLI, FN70, FCPO, and FEPO. You will also be awarded with Food Panda vouchers when you open an account with us. You can scan the QR code to register for this promotion. Tonight webinar, we're gonna have an excited session, which is participating in Q&A session. You might be the lucky one to win Food Panda voucher worth of 20 ringgit Malaysia. So stay with us to the end of the session for this webinar. All right, that's all for the promotion part from Phillip Futures. Now I would like to introduce our first speaker for tonight's webinar, Ryan, who is the head of commodity derivative from Bursa Malaysia Derivative. Ryan has more than 20 years of experience in the palm oil market and responsible for improving and expanding the commodity product offerings of the exchange. So without further ado, let us welcome Ryan to start his section.
Hi everyone. Uh, Give me a second. I'll try to share my slides. Are you able to see my slide?
Yes, Ryan.
Okay, thank you.
Yeah,
It's a
go.
pleasure for me to share the evening with all of you here today, uh, especially with the company of Dr. Satya. Right. I will be introducing um, our East Malaysia crude palm oil futures contract, as well as um, a new feature that we are looking at launching. That is basically the FCPO and FEPO inter-commodity spread. Okay, a brief description of FIPO. What is FIPO? Uh, it is a ringgit-denominated crude palm oil futures contract with delivery locations in East Malaysia, right? Two locations in Sabah and one in Sarawak, right? Since you guys are here with strong interest in the palm oil uh, outlook, I would assume most of you are familiar with our FCPO contract, which is the main contract, the cornerstone contract for Bursa Malaysia, with delivery location in Peninsular Malaysia, um, in Port Klang, Pasir Gudang, and Butterworth. We have launched this East Malaysia contract with the code name FEPO last year, October. So it is a rather new contract. I would like to take this opportunity to introduce this contract to all of you. Right. So let's look at the a bit of statistics here. Why we launched the East Malaysia crude palm oil futures contract. Right. It is basically because of the emerging importance of East Malaysia CPO market. Right. If you look at back in 1995, East Malaysia only contributed 22% of the country's total CPO production, right? Whereas last year, 2021, East Malaysia, Sabah and Sarawak combined contributed almost half of the country's CPO production, right? East Malaysia 46%, Peninsula 54% to be specific, right? If you look at the bar chart on the right, that's the export of palm-related products between East Malaysia and Peninsular Malaysia, right? Since 2013, we can see that the export of crude and processed palm oil exported by East Malaysia is actually higher than of the Peninsular Malaysia, right? Except for last year, 2021. Yeah. So last year, East Malaysia exported 7.6 million tons of palm oil, um, as compared to 7.9 million tons of uh, crude and refined oil exported by Peninsular Malaysia, right? Peninsular Malaysia, that's a small, what do you call, uh, higher in export as compared to East Malaysia, right? If you look at the line chart on the left bottom, that is the monthly CPO spread, the price between Peninsular Malaysia and East Malaysia for the period 2016 and 2021, right? So what we can notice from the historical numbers, uh, the average price difference between the two regions, it is 49.9 ringgit. That's basically saying Peninsula's crude palm oil futures contract was trading close to 50 ringgit higher than East Malaysia. That's according to the data from 2016 until 2021. But recently, since last year, there were occasions that we see East Malaysia CPO price actually trading at premium. Yeah. So in conclusion, looking at the historical number, on average, East Malaysia price is trading at a discount of close to 50 ringgit per metric ton as compared to Peninsular Malaysia. Okay, so these are the key differences between the FCPO, our main contract, and FEPO, our new contract, right? The first is the trading hours. You can see that East Malaysia crude palm oil futures contract actually start earlier, from 9 a.m. As compared to FCPO that starts from 10:30. The earlier starting trading hours is we actually wanted this new contract to be in line with Dalian opening time. You know, Dalian has got a Abadi palm oil futures contract that starts trading at 9 a.m. So we want our FIPO contract to start at the same time as Olin contract, right? Like mentioned earlier, the port of delivery. This is the second key difference between the two contracts. For FIPO, we have Ladatu, Sandakan, and Bintulu, whereas for FCPO, it's Port Klang, Pasir Gudang, and Butterworth. Position limit for FIPO being a rather relatively new contract, it is smaller than FCPO, right? It's about half of the allowed speculation or rather speculative position of FCPO. Okay, next, let's look at FIPO incentives. These are the incentives we have in place since the launch of the contract. We have a 3-for-1 waiver. Right, for every 3 lots of FIPO you trade, you actually get a waiver of trading and clearing fees for 1 lot of FCPO. Right, so if you trade 3 lots of FIPO, 1 lot of FCPO fees will be waived. FIPO margin, that's 11,000 ringgit per lot. That is actually same as FCPO contract. Another thing you should know is, if you're trading the inter-commodity spread between FCPO and FEPO, there's a spread credit of 70%, meaning you only pay 30% margin, right? So instead of paying 2 full margin for the respective contract, right? If you have 1 lot of FCPO and 1 lot of FEPO, by right, the full margin is 11,000 multiplied by 2, that's 22,000. But if you are trading inter-commodity spread, you have a long FCPO or short FEPO, or the other way around, you are only paying 30% of that. So that's about that's 6,600 ringgit per pair. Yeah, and what we try, the exchange have this plan, right? We want to roll out or introduce FCPO, FEPO inter-commodity spread order. That's in the pipeline. So we would like to launch that sometime this year, of course, subject to the regulators' approval. Okay, so let's look at what's inter-commodity spread. So it's basically a simultaneous buy and sell of FCPO contract and FEPO contract. Yeah, so it consists of a pair of opposite position. If you long FCPO, you will be holding a short FEPO. If you are shorting FCPO, you will have a long FEPO, right? So you are basically trading the price relationship between the 2 CPO contracts that reflects the difference in supply and demand, or rather the fundamental dynamics of the 2 regions. Yeah, so this is quite a common or popular strategy for grains trader, right? Even people who are trading the soybean complex in the US, sometimes they would long soybean or sell soybean oil, according to their trading strategy, right? So why trade inter-commodity spread? Typically, it is less risky as compared with an outright position. That's the reason why we actually have a margin credit, yeah, the lower margin requirement that I have mentioned during the previous slide. So the pricing of this inter-commodity spread is in the form of the price difference between the 2 contracts. Yeah, the spread can trade at 0. If it is 0, that means both the contract is trading at even money, the same price. It can be traded at a positive or a negative value as well. If it is positive, meaning FCPO is at the premium, is higher as compared to FEPO. If it is a negative value, that means FCPO is trading at a discount as compared to FEPO, right? Okay, the spread ratio is actually 1-to-1. When you trade this spread, if you long one or you short one, you actually have 1 lot each of the contract. right? Because we know that the contract specification of FCPO and FEPO, they are quite identical in terms of contract size, tick size, daily limits and everything. They are identical, except for the three key differences that we have discussed earlier in the previous slide. Okay, so this is a FIFO, FEPO. Sorry, a bit of typo there. It is actually, let me see, FIFO, FCPO. Okay, it's the settlement price spread between FIFO and FCPO. Yeah, if you look at this chart, you can see that most of the time the two contracts will move in the same direction, but sometimes one will settle at a higher than the other. Sometimes it is at a discount as compared to the other. So what you can do is if you can monitor the spread, the price difference between these two contracts, if you see an opportunity, you may want to take a position in the future, right? You can actually trade this spread already currently, but it is a little bit inconvenient for now because you will have to execute both the contracts separately, right? You have to buy one leg and sell the other leg separately. When we launch the ICS contract in the future, you will be able to execute both sides, both legs, just one order. Just click of a button, you can trade both sides at the same time. I mean, if you are already trading the calendar spread for FCPO, so the concept is very similar. We will have a listed spread price on the exchange on your screen so that you can trade the spread by one click or one trade order. You can execute both legs at the same time. So what are the resources we have at Bursa for traders who would like to learn more about futures trading? Yeah, you can go to Bursa Marketplace and Bursa Academy. We actually have a derivative virtual trading challenge. It's a yearly event actually. So we had one last year. There were cash prizes given to the winners, right? The top 5 performers and some other winners as well. If you would like more information, just go to Bursa Marketplace. Information is available on the website. So what else do we have? We have a derivative trading simulator, right? We call it DTS, right? You just sign up for DTS. You will get a login name. You will get a password. This platform is actually built on top of QST, right? If you are familiar with QST, you should be familiar with this DTS, right? You get real-time market data. You get charting tool. You get many different order types. You have code monitor. You have price ladder and all that. So it is exactly the same platform that you can use to do live trading. So it's basically a platform for you to get familiar with trade execution, to get familiar with the market flow, if you like it. So on top of that, we also have many other resources. Again, if you go to Bursa Academy, you will find many resources over there. You can see topics on analysis with multiple time period charts. You can see trend trading. You can see some education material on various topics related to futures trading as well as equity trading. Right, thank you. That's all I have to share.
Okay, thank you, Ryan, for the detailed explanation of SCPO and FEPO information. So now I would like to introduce our final speaker for tonight's webinar, Dr. Satya, who is the co-founder of Palm Oil Analytics. Dr. Satya was appointed as advisor to the MPOB, Malaysia Palm Oil Board, Techno-Economics Research Committee, and he is also an online publisher of Palm Oil Daily News data and analysis based in Singapore and serving global commodity markets. So without further ado, let me pass on to Dr. Satya. Let's welcome Dr. Satya for his sharing session.
Thank you. Thank you, Chairman, for your introduction. Thank you, Ryan. Let me just try and share my screen now so that we know what's going on. I don't know which one. I think it's this one, not this one. Okay, you can see my screen expanded. Yeah, okay, I don't see myself. Right.
Yes.
Okay, so thank you very much for the introduction. Thank you very much, friends, for joining me in this brief, short presentation. As some of you may know, that Palm Oil Analytics is the publisher of palm oil price news and data. So we are not traders. We don't take a position in the market, but we are very happy to advise. We are very happy to consult. We are very happy to discuss. We are very happy to share our notes, data, and so on. We have very active social media presence. You can see it here: LinkedIn, Twitter, WhatsApp, WeChat, and you can always get in touch with me by email here. So do not hesitate to contact me if you need anything, you want anything, you want to clarify something. I'm always very happy to discuss. Okay, so let me start with the presentation. Prices are at record high. Prices hit the last record high was on the 9th of March at 7,060 ringgit on the most active month contract. So prices are still holding 60% above where it was last year. But if you compare from the 9th of March record prices to now, we are actually down by 11%. And this is a good time, end of March, for us to review and get some ideas, because a quarter is finished. We roughly know, hey, how is production doing? How is exports doing? How are the spring planting coming up in China, in Russia, in Ukraine, and how will these soft oils will have an impact on the golden crop, palm oil? So in other words, we want to see if we see this red line going up again to 7,000 ringgit and up beyond, or will it turn south and mirror the 2021 levels? Whatever it is, plantations are doing very well in terms of their sales for plantations that can recover the crop and able to send to the mill. Remember, prices are high, but not all plantations are able to realize the full potential, because, as you know, there's a big problem of shortage of workers. So that's where we are. We are at record high prices. So what are the main reasons that brought us to record high prices in the first quarter? Very big macro news is the Ukraine-Russia uncertainty. It's dragging on, and that means there is a large uncertainty on the direction of crude oil prices, and that means crude oil movement have a major impact on all commodities, bean oil, CBOT, palm, but also on iron ore, steel, coal, and other metals. As I said, futures is down about 11% from its peak, but still doing better this year. Production is picking up. Okay, we saw the best production month in March in Malaysia in about 6 months. So how will April production look like? Production, we think April production will still be between flat to higher, but exports are not doing so well in April. So that's not putting a pressure. That's not putting a pressure on prices. But if you look from January to March, exports are running faster. Exports are up about 16.5%, but production is only up by 4%. So supply is quite slow. Demand is picking up. One main reason for very good exports in March was large shipments to Saudi Arabia, Egypt, and Iran. These are countries that traditionally buy sunflower oil. They buy a little palm oil. But in March, they have to buy because they have to meet their seasonal demand for Ramadan. So will this be repeated in March, April? I don't think so, because these countries' stocks are already very high in importing countries. Okay, so Malaysian stocks are improving. Malaysian stocks actually been in surplus over the many months. Okay, March we were just 2% higher compared to March of last year. So stocks are improving. Seasonal demand has kind of disappeared in April. Related edible oils led by soybean oil pricing is firming up on CBOT, mainly drawing support from soybeans, where the crop is very bad in South America this year, but also from the energy markets. Soybean oil is far more sensitive to crude oil price movement than palm oil. And lastly, Indonesia fumbled its domestic policies, as some of you will know. Indonesia imposed domestic market obligation in February and then raised it from 20 to 30%, which means exporters must set aside 30% of the planned export volume for domestic consumption. But then in the end, in about March, they just abandoned the policy altogether. So when the policy was imposed, international buyers would look to Malaysia to buy. Front month shot up in March. The spread between the front month to the third month was about 700-800 ringgit. But after the policy was abandoned, then it narrowed a little bit. Okay, so these are some of the main reasons I think that pushed prices higher. So where are prices heading for the rest of this year? So for the rest of this year, we have many factors as usual: fundamental, external, and macro. Some are short term, some are medium, some are long term. Okay, so I will not focus on all, but I will just highlight some key ones here. Ukraine is planting. So Ukraine spring planting starts in March and April. Not much was done in March, but in April, yes, there are planting going on. I'll show you some charts. So Ukraine planting is there, but the main problem with the planting, harvesting comes in September, is the machinery, fertilizer. Okay, and the situation is still evolving. That means we do not know. So do not assume Ukraine sunflower oil production is going to be zero when it comes to harvest in September 2022. So don't assume that. If you assume that, Malaysia and Indonesia will have to make up 3 to 4 million tons of palm oil, which is not possible because Malaysian stocks are only at 1.5, 1.6 million tons. Very low. Russia sunflower seed planting is normal, 9.4 million hectares, which is normal. But the problem is there are not many buyers who are willing to touch Russian crops. There are some, China will buy, India will buy if it's offered at a discount, but Russia is also imposing other new regulations day by day. For example, must pay in rubles. They have already said that for wheat, okay? They might say that also for sunflower oil. So Ukraine production is unreachable, logistics problems, machinery problems, fertilizer problem. Russian crop is untouchable. Crude oil prices. So crude oil prices is $100 per barrel and above, Brent and on WTI benchmark. And crude oil prices will remain elevated because of number one reason, Ukraine and Russia uncertainty. Remember, Russia is the second largest exporter of oil. So as and when we hear that the European Union is going to impose a complete sanction on oil and gas, I think that's when crude oil prices will shoot up even higher, giving a push to CPO prices. So far, we haven't heard that, and what I hear is that it's the European Union will never do that and can never do that. But what they can do is they can reduce the dependence on Russian oil and gas. So number 3, palm production. I'll show you a chart on this. So I'll show a chart on each of these very briefly. Worker shortage problem, some developments are happening, and I will tell you what are my thoughts. Fertilizer cost has shot up. I'll show you a chart, and how will that impact on production, on which country, on which sector. Indonesia domestic and trade policy. So Indonesia has a very successful biodiesel program, but that is really dependent on the biodiesel levy that the country collects. So I will show you what is the impact of that on Malaysian CPO. And lastly, biodiesel. There will be a return to the debate on fuel versus food, because food prices are high, 10-year high and above, fueling food price inflation all over the world, from Turkey to India to Indonesia, including Malaysia. So some people say, hey, we should just dump biodiesel, do not use the mandate or downgrade the mandate, use all the production for food as edible oil. But not everybody agrees. Okay, as I said, you can see here, you can see the chart here. You can see the chart here. Sunflower seed planted area is down, so it's not zero, it's down 35% to 4.4 million hectares in this planting now. And this is very evolving situation, right? So a lot of these sunflower production areas in Ukraine are in the east, which is closer to Russia, which are the names you hear, Kharkiv, Mariupol, and areas like that. Okay, so it's an evolving situation. So sunflower seed production, according to not our forecast, but UK Grow Consult, is that production will be down 37%. Seed production will be down 37% to 10.4 million tons. But Ukraine is expecting to increase their sunflower seed oil exports from 2021. So 2021 was low, but they're hoping to increase the export because they're optimistic. They think they're going to win the war and they're going to export. So that means do not assume that palm oil will be there to save all the sunflower oil dependent countries. That's not exactly the complete picture. Russia will remain the largest producer of sunflower. Together, Russia and Ukraine, they export about 80% of the oil from the Black Sea. Okay? So we could see a very quick recovery in Ukraine sunflower production and exports. This is assuming that there is some conclusion to the war. And also remember that although Ukrainian production is down, Russian production is untouchable. Other places are having a good crop season for sunflower, Turkey, Kazakhstan, and the EU. So that's the situation on Ukraine, Russia. So crude oil, as I mentioned, the main reason is really external support. As I said, Russia is the second largest exporter of crude oil. So any sanctions will suck global supply out. And that means supply is short amidst recovering demand in major developing countries and developed countries. But you can exclude China for now because China has got its problems in handling COVID, which looks like the strategy has gone wrong. Okay, so there is also the premium there. So there's premium in CPO currently on Ukraine, Russia risk war and Shanghai lockdown risk there. So any announcement to remove the lockdown in Shanghai will inject higher prices on the crude oil. Any settlement to Russia-Ukraine war will see crude oil prices lower. We'll see crude oil prices lower. because we are expecting better supply to come back on stream. Okay, although no sanctions been placed on Russian oil and gas, the fall in dependence on Russian oil from US and Canada have rattled the market, and this will continue because there is no clear conclusion to this development. Okay, so let's look at production. So production, we expect production will rise 19 million tons. We are a bit on the higher side because we are expecting that workers will come sometime, not after Raya, but sometime in the third quarter of this year in Malaysia. Weather will remain normal. La Nina has passed its peak according to all models except for one. So we look at the Australian Bureau of Meteorology. You can also look at the website. It's no secret, they will update. And you want to know when they update, you can look at the Palm Oil Analytics data calendar, and we will tell you what are the dates on which there will be an update on the short-term weather forecast. So weather is expected to be normal, and we assume that smallholders will not make a massive cut on the fertilizer application. Malaysia buys its fertilizer mainly from China, not from Russia, not from Belarus. Russia and Belarus are two big producers of fertilizer, crop fertilizer, but Malaysia mainly buys from China, so there's no problems there. So production up by nearly 5%, but still below the 5-year average. Indonesian production is also expected to do better at about 48 million tons, an increase of, we peg about increase of 1.1 million tons. The government thinks it will be higher. I think if they say 48.64 million or 49 million tons. But remember, the weather is very favorable to production in the Kalimantan region for Indonesia. And there does not seem to be any restriction to expansion. Indonesian planted area is about estates and large plantation is about 14 million hectares, 14.6. Then if you add other smallholders, it comes up to 16 million hectares. And there is more space for growth. Unlike Malaysia, Malaysia actually has cut down on the palm planted areas because there's a lot of development happening. A lot of the plantations are converting from oil palm plantation title to residential titles because Malaysia is a developing country, and like any developing countries have a major problems with housing, schools, and things like that. Okay, so that's two production from Malaysia and Indonesia, which makes up about 80% of global production. Okay, worker shortage problem. We heard that the government has signed or has agreed to recruit 32,000 migrant workers. So the actual requirement is about 100,000. That's the shortage, but 32,000 is just the harvesters. That's just a starting number. So even if you get 32,000, it's not really complete. The government has finalized memorandum of understanding with Bangladesh and also with Indonesia, but there seems to be a problem with the system that the Malaysian government has proposed. Foreign Workers Centralized Management System. You can see the last point there, FWCMS. So I just get the feel that the counterparties are not completely happy with the system. Remember, this system is not new. This system was used for visa application and so on. But now this is a central system for hiring maids, construction workers, quarry workers, and plantation workers. So the minister was asked recently, how many people have applied? How many foreign workers have applied to enter Malaysia in total? So as of April 1st, the Human Resources Minister said 475,678 applications have been received. 475,000 applications have been received. But to date, only about 2,600 applications been approved. That's very dismal. That's only 0.55% approval rate. Reason: incomplete information, inaccurate information. So there seems to be a big problem with the system in itself, the adoption and the processing. So there is some doubt now that the workers will arrive after Hari Raya as some expected. So we are optimistic. We think production, the impact of workers' arrival will be felt sometime in the third quarter of this year. Workers have to be hired, they have to be trained, quarantine rules, they have to be briefed, and then boots on the ground. So we think sometime in August, July, August, September. So August, September, October are peak production periods in Malaysia. So last year, because of shortage of workers, Malaysian plantations lost about 2 billion ringgit. So I think this year the MPOA and MPOB will be a bit stronger to push for speeding up of the hiring of the workers. So let's look at fertilizer cost. Fertilizer cost been rising since last year. Many reasons. China restricted exports, demand, very strong demand from Europe because of the extreme cold weather, and this has pushed up natural gas prices, and natural gas is used for the production of urea and other other fertilizers. So you can see the chart here, fertilizer cost of DAP. DAP is the fertilizer that contains nitrogen and phosphorus. Urea is widely used in agri crop and also as animal feed additives. The main function is to provide plants with nitrogen. Okay, and then MOP, muriate of potash, again widely used, and primary nutrients for plants, all used in the oil palm plantation. So, and you can see us, Russia, biggest producers of nitrogen, phosphate, and potash. So NPK, they call it in the industry, 3 primary nutrients used in oil palm plantations. So there is capacity to produce, but there is inability to ship these products, okay, because of sanctions, political reasons, and so on. So there is very strong crop demand from Brazil, United States to Indonesia, but geopolitical supply will have a major impact on the cost because of the supply shortage. So far, there is no sanctions on fertilizers because the EU and the US thinks that poor countries or developing countries should not suffer. Indonesia mainly buys from Russia, so that's going to be a problem if there is any sanctions. This map here just shows you the flow of potash. Again, one of the main nutrients used in plantations. Here's Russia, and you can see all the flow going to Indonesia here, big fat line. And this is Belarus. Again, you see Russia and Belarus, both two countries are on sanction list. But I think the main guys in Eastern Europe that will have an impact is Poland. So Russia exports potash big quantities to Poland, and that's going to be a big impact for production because Poland have taken a very strong stand together with the NATO allies. So exports will be very, very much restricted to Poland. Another country to watch is Brazil. Brazil is a big buyer of potash from Russia, and that means soybean crop will be stressed. Animal feed will also be stressed in Brazil. Remember, this year production is already cut 123 million tons from 150 starting point. So South America will see about 22 million tons loss in soybean crop, and that's why we see very high prices in the American CBOT. Okay, so that's a story here. But for Malaysia, I mean, you can look at this website; it's a free thing. So from Malaysia, most of the exports come from China. So China buys from Russia, processes, and then re-exports to Malaysia. So Malaysia is okay, but Indonesia will be facing problems if there are any sanctions that are placed on fertilizer. Trade policy. So we looked at So we looked at Ukraine, Russia, crude oil, palm production, workers shortage, fertilizer cost, Indonesia. So I'm going to almost be done. So trade policy. So levy and taxes are huge in Indonesia because they need the money to fund the biodiesel production. Remember, levy and taxes alone makes up almost 40% of the CPO price compared to 8% in Malaysia. And that's why Indonesian CPO are mainly quoted nearby, not far out like Malaysia. So Indonesian exports have been very uninspiring, not very exciting, to be honest. You can see this blue bar here, which shows you the difference year on year for refined oil, thinning out, not great, no growth. Brown bar for CPO, it's even worse. It's actually lower compared to 2020, compared to 2019, and 2021 compared to 2020. And this is because a lot of the buyers are shunning from high-priced CPO from Indonesia. And Malaysia has outstripped Indonesia with the exports of CPO. The last time I saw the number in Malaysia exported 4.5 million tons of CPO compared to Indonesia, which exported only 2.5 million tons. So small compared to Malaysia. But that means Malaysia front month CPO will always be very tight because a lot of buyers are looking to Malaysia to buy their CPO instead of Indonesia. Okay. So in absolute numbers, Malaysia is a bigger exporter. That means refiners are always short for making stearin, PFAD, and olein and oil. Okay, so that's a problem with the refiners. And that means refiners may have to import from Indonesia. Okay. This red line shows you the CPO reference price. The reference price higher, and exports of CPO is going lower and lower. And recently, Indonesia made changes to the levy and the taxes. Levy and taxes on CPO is about $575, which is very steep. And you can look at the charts, the table on the Palm Oil Analytics website. It's all available for free on open access. Okay, so here Malaysian CPO is winning. So that's why we see CPO futures on Bursa Malaysia is, especially the front month premium is quite high. I think this explains. So when Indonesia reduces the levy, then we will see a slight drop, not a slight drop, you'll see a significant drop in Malaysian CPO front month. It will be a what you call a panic fall. Okay, so there's a lot of fraud in the market right now. So when will Indonesia announce CPO reference price? They will announce usually on the end of every month, but you can calculate the numbers by 22nd of every month. You will be able to calculate. I usually calculate and just post it on the Twitter. But the levy has been at the top end for many months now. Okay, and with prices so high, we think it will not come down anytime soon. So that means Malaysian CPO futures front month will remain firm, premium will be high, and but in terms of cash exports, FOB wise, Malaysia is not really at an advantage because there are other factors that you have to put in, shipping cost, insurance, trucking cost, processing costs, and so on. Okay, they're almost neck and neck. Okay, and when it comes to landed cost in India, it's probably no difference. Okay, a bit on biodiesel. Indonesia is one of the most successful biodiesel programs in the world, but Indonesia will maintain the biodiesel at B30 for now, although no comments have been made about downgrading despite the widening palm oil to gas oil spread, which is around 400 to 450 US dollars. So we think Indonesia will continue to maintain B30, but the usage will be higher this year because remember, 70% of the biodiesel users in Indonesia are motor vehicle. They are all coming out after the lockdown. so the usage will be higher. We agree. The government said it's about 10.15, 10.20 billion kiloliters, which means it will take away about 11 million tons of CPO, 11 million tons of CPO for biodiesel alone in Indonesia. Malaysia also has biodiesel program B20, but it is not been very successful despite repeated promises to implement nationwide. It has not happened, and I don't think it will happen very soon. Okay, these are projections. When you get the slide, you can have a look at it. We think production will improve by 5%. Imports will decrease. Imports was higher in 2021 because production was down. There was sudden surge in usage, domestic usage in February after the floods in Malaysia. Government, non-governmental organizations bought a lot of palm oil, and there was shortage in the market. There's a lot of imports. Exports, we upgrade to 9.3%. Domestic consumption will be lower in view of higher prices, and stocks will remain almost unchanged. So stock levels in Malaysia seems like will always be below 2 million tons for now. It's very difficult to see how we can go beyond 2 million tons because production has reached almost maximum capacity, and demand is strong because Indonesia is not able to meet the CPO export demand. On the Indonesian side, so carry forward has been down. Production should improve. This is CPO and CPKO. Production should improve by 3%. Imports no change, so it shouldn't be 0.7 here, or it can be because of very small amount. But exports will also be lower because the government does not have a favorable policy on exports in Indonesia, both on upstream and downstream. Okay, but stocks will have a massive improvement, and domestic consumption will see a big rise. Remember, Indonesia is coming up from big lockdown. Vaccination rates have improved. Food, biodiesel, and oleochemicals are the big three users of domestic biodiesel, and oleochemicals is doing particularly well this year in Indonesia. So price outlook, we think there is still massive premium in the CPO from Ukraine-Russian war risk. So any settlement can bring the prices down. So the risk premium is still there. Prices are likely to move higher still. I mean, front month was at 6,900, but front month will expire at midday tomorrow. I even think that it might test 7,000 ringgit before expiry at midday. But there are still legs for prices to go higher before coming down. And prices will only come down when we see better production coming on stream, and there is some demand slowdown because of higher prices. All in trades are slowing down because prices are just too high for JS and OND. Okay, so trade lower from May onwards. We are very bearish from the second half onwards. Better production, supply, and some sort of settlement to the Ukraine-Russia situation, and a return of soft oils into the market. Remember, the harvest for spring planting is in September. So China is planting now, Ukraine is planting, Russia is planting. So September, by June, we will know roughly how are the crops doing, and June is when usually the prices sees a turnaround as soft oil harvests come on stream. And that means spot month premium, this is the first month premium to third month, will narrow to 100 points. Okay, so those are my forecast. So I just want to remind that when we look at prices, you have to look at fundamentals, technicals, speculation, and other related oils. So it's good to just have that idea. Okay. So here are my contact details. I'm happy to take any questions. Thank you.
Okay, thank you, Dr. Satya, for his great informative sharing on palm market outlook, as well as Ryan. Okay, now is our Q&A session. So if there is any question, wait lah. So if there is any question for Ryan and Dr. Satya, do type them out into the question box and I will address the question in a short while. Now I would like to continue for my part for Phillip Futures. So if you are interested and wish to open futures trading account online, feel free to visit our Phillip Futures website, or you can scan the QR code and it will directly link you to the online account opening form. If you need any guidance on online account opening, please do not hesitate to contact us. Do check out our latest Omsen reward promotion, which is in conjunction with this webinar. You will get to earn cash reward up to 400 ringgit when you start trading FKLI, FM70, FCPO, and FEPO. You will also get to be awarded with Food Panda voucher when you open account with us. You can scan the QR code to register for this promotion. Okay, so now come back to our Q&A section. Let me filter out first. Okay, the question to Dr. Satya, there is one question on how the post-pandemic affect the palm oil market.
Okay, I'll keep my answers short so that we can take any questions. So I think production will somehow return to pre-pandemic. Exports will also return. Export seems like doing better than expected. I think it's just total demand, aggregate demand is doing much better than expected globally, and that's why we see massive rise in inflationary pressure. And now the talk is about how can we slow down aggregate demand by increasing the interest rates. So I think in terms of recovery, aggregate demand, overall demand will see a very strong recovery, quick recovery. Demand will rise faster than many supplies can keep up, whether it's iron ore, metal, oil, gas, palm, soybean oil, canola, rapeseed oil. Just demand is just so strong. Remember, a lot of people are getting vaccinated, a lot of economies are opening up, so you are looking from a low base to a higher base in 2022. So that's why there is a massive inflationary pressure that we can see globally. So I am optimistic, and I think demand will do very well in the post-pandemic. Long term, I mean, it's very difficult to say, but there are one big uncertainty is the Ukraine-Russia thing. So in other words, global geopolitics will be the main price driver for some time until there is some settlement. Okay, I'll stop there.
Okay, move on to second question. What do you think is the fair value for new term spread such as June, July, and August?
Okay, so I'm not exactly sure. I mean, as I can say, the spread right now, if it's wide, if it's very wide, wide means 500 ringgit and above, between first to third month. If it's wide, it simply means that the nearby supply is very tight. That's what it means. That means the market is pricing in a very tight supply. Plantations cannot meet the demand. So that's why it's very wide. I think it should be below 500 between the first and the third. Subsequent months, usually it's about 50, 100 ringgit spread. I would say it's a bit normal. I mean, you can see the Olin prices. Olin prices, usually the difference is about 20 to 50 US dollars, 20 to 50 US dollars. So I would say along those lines. But if it's wide, like we saw in the beginning of the month, so that means the market really thinks that production is going to be a big problem. It's going to be really, really tight. And that's the great thing, having the futures market. You're able to discover what's the situation, because it's transparent. I mean, nobody can hide. That's the market feel is that, whether it's FCPO or FIPO, it's there.
Okay, one more question for Dr. Satya. There's one question on, is there any possibility of demand destruction in next 6 months? Any outlier years?
Yeah, no, I don't think there will be any big demand destruction. As I said, this one uncertainty when it comes to demand is China. I mean, I'm just so surprised that the government has put this massive lockdown in Shanghai. I mean, Shanghai is a major financial hub, the major financial hub. So it looks like things have not gone well. It appears like that. Things have not gone according to plan. So if there is an extension of lockdown in cities, you remember there was also a lockdown in Guangzhou. If there are more lockdowns in the cities in China, I think there will be a big demand loss. So Malaysia exports around 5.5 to 6 million tons. China imports about 5.5 to 6 million tons of palm product. So that's a big market. So if there is demand destruction in the near term, it will be China. Will there be demand destruction because of prices? I don't think so, because all prices are high. In fact, palm oil is trading at about $60–70 discount to bean oil from Brazil. So that's why the Indians are grabbing palm oil from Malaysia very quickly this week. They've been buying a lot. So I don't see any demand destruction except for China. Outliers, weather, I don't see there is any major impact this year. Only thing is the sunflower oil that may or may not come out from Ukraine. They are optimistic that there will be exports coming out. So not sure about that. Remember also, a lot of these countries, pro-Western country, America, EU, NATO countries are willing to help Ukraine. So they might buy. So it's not like, they got nobody to sell. They might buy in terms of economic interests. Okay. Other outliers, I would say, I wouldn't put my money on the pandemic returning. So I think it's over. I think it's over. Vaccination story is over. You take it or you don't take it. That's it. Travel is back to normal. So that means people are spending money. Edible oil consumption is up. I don't see anything big that can swing or disrupt demand for now.
Okay, thank you, Dr. Satya, for the sharing. One more last question for Ryan. As SEPO liquidity is still quite low at the moment, are we expecting FEPO volume to pick up moving forward?
Not hear you so well.
We can't hear you clearly.
It's a lot of noise.
Still cannot. Now still can't hear you. Still got the noises. Yeah.
Can you hear me?
a bit soft.
Right. Okay, I can hear you now.
Okay. Yeah.
So, yeah, we do expect FIPO volume to be increasing. The reason being, we are doing a lot of promotional roadshow or promotional work, especially in East Malaysia, right? On a regular basis, we visit commercial players in Sabah as well as in Sarawak. What we need now is participation from the commercial players, right? So as soon as the commercial players become familiar with the contract, they are willing to put in prices on the trading platform, we will see more volume coming in, right? Because this is basically to build the entire ecosystem for FIPO, right? So we need different types of market participants, right? We will usually start with market makers at the initial stage. We would have to work hard in getting the commercial players to come in. After that, we will need hedgers to come in, speculators to come in, fund managers. We would need different types of people to come in to make this market dynamic. And we are doing all we can, trust us, in terms of promoting this contract.
Okay, thank you, Ryan. Okay, guys, due to the time constraint, we will just end this Q&A session. And for those questions which have not been answered, our representative will reply you privately after this webinar. Yeah, okay, so move on to our Q&A session for this part to win the Food Panda voucher today. So are you guys ready? So there will be three questions, and each question you will have about 10 seconds to answer for the question. So the first question is, the product focus in, wait, I launched the poll. Okay, the first question is, the product focus in Omsen Rewards promotion is from which exchange? A. SGS Singapore Exchange. B. BMD Bursa Malaysia Derivative Berhad. C. HKFE Hong Kong Futures Exchange. D. JPS Japan Exchange Group. You guys can have a vote for the answer. Okay, so I move on to the second question. So what is the minimum price fluctuation for SCPO? A. Malaysia Ringgit 25 cents per metric ton. B. Malaysia Ringgit 50 cents per metric ton. C. Malaysia Ringgit 1 per metric ton. D. Malaysia Ringgit of 2 per metric ton. Okay, now I will move on to the third question. Okay, so if Indonesia increase its levy and taxes on crude palm oil, will it drive the price of crude palm oil in Malaysia higher? A. Yes. B. No. Okay. That's all for the three questions for the Food Panda voucher giveaway section. So thank you guys for participating in this Q&A session. So for the first question, the answer is BMD, Bursa Malaysia Derivative Berhad. As you guys knowing that we are collaborating with Bursa Malaysia Derivative for this Omsen Rewards promotion. So if you are interested to trade for FKOI, FM70, and FEPO and FCPO, do check out for this promotion. So for the second question, the answer is Malaysia ringgit of 1 per metric ton. And for the third question is yes, because if Indonesia increase levy and taxes on crude palm oils, then it will be more costly for the importers. So it will make the refiners to rely more on Malaysia's crude palm oil, which made it to be high in demand, causing the crude palm oil to be higher. Yeah, that's sum up for the Food Panda voucher section. So if you guys are interested to know more about us, you can connect with us now on Facebook, LinkedIn, or YouTube by searching Phillip Futures Sdn Bhd, and Telegram by searching Phillip Futures. Do like and subscribe our page if you haven't. We will consistently update our events, promotion, announcement, and market news. Our webinar today will also be recorded and uploaded on our YouTube channel too. So if you have any queries, please do not hesitate to contact us through calls, email, website, live chat on Facebook Messenger. You can take a screenshot for this if you would like to approach the nearest branch representative. With that, I will end the session for today. Thank you everyone for your time to join our webinar tonight, and also many thanks to Ryan and Dr. Satya for the informative sharing. Good night, everyone, and stay safe.
Thanks, Dr. Satya. Thanks, Mi. Bye-bye.
Bye-bye.